The people who succeed are irrationally passionate about something. Naval Ravikant. And my irrational passion is charting the stock market, is figuring out which way stocks, ETFs, whatever it is I'm tracking is going to move. And that's based primarily on weekly vertical crossovers. And those are very simple, my friends. That is when the price percent oscillator, our main indicator, it's a lagging indicator. When it crosses over the red signal line, what does it show you? Typically, it shows you huge swings in investor sentiment, either up or down. And that is what we are looking for. That is what we are looking to trade. That is what we want to see happen. And again, fear and or greed. When we see fear or we see greed, those are the things that tend to drive the market. It typically breaks down to something that simple. Think about, in most investing, it is a binary decision. The market is either going down, so I get out or go short. It's going up, so I go long, jump in and ride it. And of course, we make it a little bit more sophisticated in that there are inverse funds. And in fact, that's what I'm going to put at the end of today's video. I haven't given you that in a while. Inverse funds, which move in the opposite direction of the underlying funds, such as SPY. That's the Standard & Poor's 500. It's a big basket of huge international companies, and it's a broad swath of the market, 500 big stocks. Well, what is the opposite of that? Very interesting that you ask. Here is a simple short fund. There are others. This is just a one-time short. In other words, it tries to match percentage for percentage. When you see the S&P 500 going down like we saw during the COVID crash, what happened with SH? It went up. And as the market's been going up over these last many months, for many weeks, what has SH been doing? Grinding down. Well, you don't want to be in it then, do you? But you do want to be in it when the market's crashing. So again, things for you to practice trade. Remember, we're not a stock calling service. We're an education firm. Want you to train with us, and our book is available. You want to supercharge that training. More about all that stuff later. Let's jump into these markets. What do we see happening today? We see the market down. And in fact, I'm in post-market right now. Let me go to regular hours. The charting system that I'm using right now, the web-based, I'm using the web-based version of TC2000. That is the platform, charting platform that we are using. I think it's the best in the world. It's one of the few that has the price percent oscillators, which is what we use. It's a percentage version of the MACD. Also, the derivative oscillator. You can't find these things on every, particularly the free systems. Now, freestockcharts.com is the free version of TC2000. TC2000 will cost you a few bucks a month, but you'll see a link in your show notes for $50 off if you want to get this real time. That is literally minute to minute as to what's actually going on in the markets, plus pre and post markets. You can subscribe, sign up for the services, and get all that. And again, not really that expensive. So check it out if you're interested. Now, we see the market down for the day as far as the S&P goes, 1.20%. Q's down some too, as is gold. Bonds are up. Let's jump in. What do we see? We had that weekly vertical crossover. This last Friday, we have a red open box candle, means a slowdown in that up movement. Again, down for the day. Price percent oscillator is still trying to pull slowly away from the red signal line. Derivative oscillator has gone green. Two-day chart. We can see where the two-day candle representing Monday and Tuesday was a green up candle. This latest one, still an open box candle, but a slowdown. We can see price right there at the two-day trend line. Derivative oscillator still moving up a little bit. Price percent oscillator is flat. Now we go to the half day. What do we see there? We saw where, again, the market trying to move up in the morning and then dropped off in the afternoon, pushed through the half-day trend line, sitting right there on the two-day trend line. So we'll continue to watch Monitor this, see how it goes. What about the NASDAQ 100? Down 0.74% for the day. It stayed negative. As far as the price percent oscillator goes, derivative oscillator, it's about, well, it's actually heading down a little bit. The derivative oscillators still losing some downward momentum. Go to the 2-day chart. We see the price percent oscillator. There was a crossover back on the 2-day candle ending the 9th that represented the 6th Friday of November and the 9th Monday of November. And then that was where the 2-day crossed over. Saw things pull back a little bit on that next candle and then up the next 2 candles representing 4 days. It's the first day of the latest 2-day candle. It's dropped through the 2-day trend line, still open box red, no wick on the bottom, wick on the top. We see the price percent oscillator, like I said, going sideways. And then we go to, same thing happened in the afternoon, a little weaker in the morning, but then moving down and pushing through. Not only did it start off pushing through the half-day trend line, but also pushed through the 2-day trend line at the end of the day. So we see that price percent oscillator crossing derivative oscillator, not crossed over going red yet, but is losing energy. So we'll watch and see where these things are going to go. Now keep in mind, if we do have, particularly if it's a big day tomorrow, you could have a 2-day recross going down on the NASDAQ 100. Now when we look overall, folks, look where we had our last high. All the way back on, well, we can, again, let's move, there we go. We can still see that our last high on the NASDAQ 100 was all the way back. It was $303.50, and we haven't hit that since then when we look at our weekly chart. So what's happened is when it hit that at the beginning of September, rolled off the rest of September, up through mid-October, started moving down, and now just sort of flipping back and forth again. Lots of uncertainty out there. I guess, maybe the market's trying to figure out what in the world is going to happen, when this presidential thing's going to be wrapped up, when it's going to be accepted, what's going to be done. I don't know. But the market is, again, trying to plug along and figure out which way it is going to go. When it comes to bonds, they were up for the day, 0.29%. And what do we see this week? Again, lots of indecision, a green open box spinning top, long wick on the top, another wick on the bottom, about half that size, but still about the size of the candle itself. Price percent oscillator flattening out, derivative oscillator losing downward momentum. That price percent oscillator is still negative, so the overall mood of the bonds, 20-year government bonds, is down. Go to the 2-day chart. What do we see there? Well, we told you when that crossed over at the close of the candle on Tuesday going up, continued its up movement on Wednesday, pushing through the weekly trend line. This is just the first day of the latest 2-day candle. We look at that half-day chart. It ended the day sitting right on it, up in the morning, pulling back some of that in the afternoon, not losing all of it. Price percent oscillator heading up, derivative oscillator losing some momentum. So again, still snaking around trying to figure out its way. As I've told you guys, this is more and more like the summertime trading zone than the fall-winter trading zone. And the summertime trading zone was like the fall-winter trading zone. Very odd to see things switched up like this. Just a strange, strange time. Now we go to gold. What do we see there? Gold was down for the day, 0.57%. Remember, gold hit its high back at the beginning of August and has slowly been trundling down since then. We see, as far as our weekly trend line goes, gold just sort of right there on it. Price percent oscillator heading down, derivative oscillator gaining downward momentum. Go to the 2-day chart, and we see price below the weekly trend line, below the 2-day trend line, and below the half-day trend line. Again, heading down, price percent oscillator pulling away from the red signal line, ever so slightly, derivative oscillator gaining downward momentum. And again, down movement in the morning, followed by more down movement in the afternoon. That half-day chart crossing over in the afternoon, heading down. Folks, the markets are weird. I'll be the first to tell you that. Waiting for things to sort out, give us some clear signals. Very strange, very odd, but you know what? We will keep plugging away. We will keep that irrational passion. That's what we're going to keep because, again, 10 to 15 minutes a day is all we ask. Plug away day after day, fill out your trade worksheet, daily market worksheet, weekly market worksheet once a week. And again, all those are available in your show notes as PDFs for free. You can also order our bound version of the daily market, weekly market, and trade worksheets. We have a 3-month bound version. You get a discount if you buy 4 of those, a year's supply. Check that out. You'll see a link in the show notes. Also, our book is available. And Patreon supporters, we love you. We appreciate you helping with all the costs associated with our channel here. Thank you so much, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.